Wonderful good day, ladies and gentlemen, out of our studios here in Munich, Commodity TV, and it's time for a company update. Well, yesterday Timmins came out to merge with Newstrike. Well, Timmins Gold combines the business with Newstrike Capital to form an emerging Mexican-focused intermediate gold producer, guys. Wow, let's have a look on that. Well, let's have a short look why it would make sense to combine the businesses first. The deal has a 20% premium based on the closing price of Newstrike shares on the TSX Venture on 13th February 2015. It implies a total transaction value of approximately 140 million Canadian dollars on a fully diluted in-the-money basis, and at the pro forma company will have then 289 million shares outstanding, and the pro forma ownership of the new company is 63% by Timmins Gold and 37% by Newstrike. First of all, they have a producing asset, the San Francisco mine, and the two robust development assets called Ana Paula and Caballo Blanco. This tremendously enhances Timmins Gold's potential for production growth and, of course, even more important, the cash cost profile. The life of mine annual average gold production is expected to grow by 175%, reaching approximately then in the future 326,000 ounces of gold, assuming both Ana Paula and Caballo Blanco are put into production at the levels estimated in the both of the PEAs. The all-in sustaining cash costs per ounce are expected to be reduced by 21% to less than $780 per ounce of gold. Timmins Gold believes that the capital requirements will be manageable and can be initially supported by cash flow from San Francisco and the ability to efficiently sequence the development of Ana Paula and Caballo Blanco. In addition, there is a significant increase in the global resource size and grade, with a 75% increase in total measured and indicated gold resources and a 34% increase in average of M&I gold grade. The increased scale of the combined company will enhance its capital markets profile and liquidity and provides for strong re-rating potential. The strong support from Newstrike's largest shareholders, two companies controlled by a trust settled by the late Adolf H. Lundin, and Timmins Gold's largest institutional shareholder, Century Investments, is another big advantage for this merger. The combined companies can now together benefit from the advantages Mexico has. The country is politically stable, has a long-established mining history, and is a global leader in precious metal mining. In addition comes access to infrastructure and a skilled local workforce. Well, what will the future look like? The new Timmins has now a portfolio of high-quality assets with strong organic growth. The mine San Francisco produces 118,000 ounces gold so far, plus the planned future production with 92,000 ounces from Caballo and another 116,000 ounces from Ana Paula, hopefully brings then the total annual production to approximately 326,000 ounces in the near future. In addition comes a nice portfolio of exploration properties. This positions Timmins Gold as an emerging intermediate producer, and they close up to B2 Gold and D2 Gold. Another important advantage is the leading growth with the low capital requirements of only $246 million for the production developments for 2015 until 2019, with a planned production growth of 175% as said. But even more important is the improving cash cost profile, with a 21% decrease in the 2015 expected all-in sustaining cash costs, net of byproducts of course, down to $777, with an increasing margin by almost $200 per ounce gold. The capital requirements to drive the growth are manageable through the cash flow from San Francisco. Also, project financing is available for high-margin assets with robust economics, and the capital needs can be reduced through optimization of the work. The expanded resource base has significant exploration upside. The total M&I gold resources increased by 75% to 4.35 million ounces, and the M&I grade raises by 34%. The weighted average head grade increases by astonishing 107%. As a summary, we think the business combination makes sense, even if some analysts think it was maybe a bit too expensive, but we think more on the future. But given the fact that the management and technical team of Timmins built San Francisco for almost $50 million and is absolutely able to cope with all endeavors arising, we think that this is a nice deal and could Timmins value in some years, well, over $1 billion. We will see. Check it out and do your own diligence due diligence, of course, and your homework. Thanks, and bye-bye from Munich.